some people say there's some reasonable prices now. What do you say?
Yeah, I would agree with some of that. And I think, as we look ahead to the Fed meeting in just a couple of hours, we're likely to see 50 basis points of tightening. But we're getting pretty close, we think, to the end. The key, and what we're unlikely to really get a whole lot of confidence on from Chair Powell, is what I think matters more for some of these parts of the market that you're mentioning, including M&A and just the cost of capital in general, which is what happens in terms of rate cuts in 2023. And the market expecting about 75 basis points of rate cuts between the middle of 2023 and January of 2024. If that does not pan out and the Fed is more anchored towards holding rates higher for longer, then you're going to see probably a little bit more pain into some of those more expensive parts of the market. But as it relates to technology, it's been really interesting as rates moved higher very quickly this year. The dollar strengthened very aggressively. We saw tech take it on the chin, but we've seen the dollar weaken quite a bit. Rates have come down, the 10-year Treasury about 3.5%, and tech hasn't really gotten that tailwind. And so I think we would expect, as the focus shifts to earnings, some of those more resilient earnings profiles from technology to do better in the new year.
But how much does that, I mean, I understand, yeah, Fed, how high do they raise and how long do they hold and then do they cut? Sure. But a lot of these tech names, they're arguing that they have special technology, even within certain niches, that's going to lead over years to outperformance. So how do you gauge? What are the metrics that you use now in this uncertain economic scenario that we're in to judge where value is?
Well, I think it comes down to, again, you're absolutely right. Not so much what happens over the next couple months for the Fed, but really where is that steady state interest rate? So that plays into the valuations, and then the earnings profile. And I think as we look at this expansion, it's just really hard because technology in this market compared to 15 or even 10 years ago is playing a very different role, which is why, when we single out enterprise tech as opposed to ad-based tech or consumer-facing tech, it's just such an integral part of businesses. There's really not a whole lot of wiggle room to cut back. So companies have to continue to push on technology. I think that is very key for the long-term earnings trajectory. And then on the valuations, as we look at, I think inflation coming down is great. The Fed hiking another 50 to 100 basis points, fine. But what is that medium-term outlook for interest rates? And there we see a number of structural forces contributing to higher interest rates and slightly higher inflation in the decade to come versus what we just lived through leading up to the pandemic.
Yeah, we sometimes forget just how good we had it, at least in terms of inflation. But Meghan, for every call there is that argues inflation will moderate in the coming year, there's the commensurate call that earnings will be a symptom of that. And I wonder what your base case is right now for S&P earnings in the next year.
Well, it's really interesting to look at first the bifurcation between what we're getting in terms of earning estimates from top-down strategists, closer to $200 for the S&P, versus what we're seeing on the bottom up side, still around 230. So we expect a mild recession in the year ahead. We expect some earnings contraction. We're probably more in the $215 to $220 earnings camp for next year. So certainly seeing a little bit of moderation, but that is really the key as we look ahead. And I think you're going to see some sort of coming together of those different earnings estimates. Maybe top down is a little too pessimistic, but bottom up and really what we bake into valuations is still a little bit too rich.
And Meghan, looking within tech, I know you're favoring cloud and enterprise names over some of the consumer tech names. How much does that have to do with, you think the valuations have come down too much, or do you think there's more opportunity for take privates? John mentioned Coupa earlier this week, and we know that Thoma Bravo has raised a ton of money to do more deals like this.
Well, I mean, higher rates are going to put a little bit of a headwind on any sort of buyout market or the private markets in general. But there is a lot of capital out there, and there is still a lot of cash on the sidelines looking for places to go. So in the public markets, again, I think it's really what you need versus what you want. And that's why, enterprise tech, cloud, sure, earnings are probably going to come down, but you're going to be looking at better profile relative to a lot of other areas of the market, including cyclical value.